Top of the morning. Back at it again with another one. And today we're looking at the NASDAQ. Uh, yeah, I took a look at the chart today just to see what would happen. The model did show itself, and I just want to run through the logic behind today's trade. I want to just put it out there for full transparency that I did partake today. I took the position. Um, Granted, I said I wouldn't trade, but I'm just putting it out there for full transparency. The breakdown in discipline is something that I'll fix. But moving forward, though, if it's your first time watching the video today, welcome. It's your boy Sich Madi. This is the channel where I am obviously trading, but the method of trading, I'm specifically using ICT concepts. I've been learning his concepts since 2022, and one thing that I struggled with is just how do I put everything together? If you've been on his YouTube channel, you'll see there's a lot of tools available, but practically, how do you use it? And on this channel, I'll just be running everyone through how a day to day looks like and how we can use these tools to inform decisions and trades and etc. So, with that being said, welcome. I don't expect you to be here for long, but for those that do, you know what it is. Now, today's trade, I'll start with a higher time frame. If you haven't watched the previous upload, or you're gonna do whatever you're gonna do. It is what it is. But we are in this range now. That low, that range high. We've been in that range, and as you can see, price has been printing. That's a 4 hour time frame, by the way. So the premise for last week's trade, or our last trade was that double bottom that we saw. Obviously, we partook in price going to the downside to run that level of sell side liquidity sharp. When this week started, I noticed price kind of jumped up, right? So price jumped up cool after running that sell side liquidity. I also noticed that there is a fair value gap that exists on the 4 hour time frame, right? Just above where price is currently. This fair value gap exists, so I was like, okay, cool, that would be my draw. Apart from the fact that there is a double top there, and apart from the fact that overall in the range we're currently in, right range low to that, or that range high. Yeah, let me say this range high to this range low, right? This is the range we're in. There's a double bottom there ultimately, and a nice pool of sales of buy side liquidity. Liquidity there, low resistance liquidity run. I'm looking forward to riding this up all the way to that top, but that's another conversation. So to bring it back, 4 hourly time frame, we ran sell side liquidity, double bottom, we ran that. Price was beginning to push up. We had a fair value gap on the upside. That's what informed me after looking at a higher time frame that short term will probably spike to the upside. Also taking a note that we have a bullish new week opening gap on the chart as well. So all of those things taken into consideration, I was like, today I'm simply looking for buys. Now that I had an idea of what I was looking for on the higher time frame, I then went back or down to a lower time frame. I'll go specifically to a 15-minute time frame and we'll take a look at it there. Cool. 15-minute time frame, when I got to my chart, this existed and that existed. So I had a double top, right? So I was like, cool. Target double top on the M15 time frame. I had my bias from the 4 hourly after doing top down analysis, of course, from the weekly to the daily to the 4 hour. Then I went to the 15 hour or the 15-minute time frame and I had my target, which was this 15-minute double top there, right? Like I said, this didn't exist at the time, or this part rather. We entered there, exited there. So before I got into the trade, we had this and price was swooping down like that, right? So cool. Bias from the 4 hourly, we got that. Target from the 15-minute, we got that. It is now simply just a thing of waiting for our entry window to open, wait for our entry trigger, and then we took the trade from there. If you haven't watched the other videos, I recommend you watch specifically the macro vision ones because I really dove into the method that we'll be exploring on this page. Obviously, for those who have been tapped in, you've of course seen the Enigma video. That is a method that I'm currently not using. I'm specifically going to focus on the macro trades for the next year. For the rest of the videos, that's what we're going to be looking at. So, for some necessary context, be sure to check out the macro vision videos. They're on the YouTube as well. So, 5 minute quickly just to take a look there, right? You might notice or ask, what are these lines here? Now, why I say check out the macro vision videos gives a lot of context, but there are three specific macro windows that we will be exploring. The first one in each day would be the London macro. That one is going to be at 0250 Eastern Standard Time to 0310 Eastern Standard Time. That 20-minute window, that is where we would be ideally looking for our entries. Anything outside of that window we don't enter. Anything outside of that window we don't enter. Specifically in that macro, that's where we're looking for our entry. Uh, Let me just do this. That's where we're looking for our entry signals. Now you might ask, what is the entry signal? Entry signal is simple. We are going to take the retest of an inversion fair value gap within the macro, specifically or preferably after liquidity has been swept. Now, there are two instances. There might be an instance where there is a move that is already developing before the macro we enter in, and we're more so just entering the continuation. Or, similar to today, there is a manipulation and we re enter at the reversal of the manipulation, pushing up. Now, quarterly theory, if you're aware of quarterly theory, you know. If not, that's also cool. But that's a little something for me. If you haven't already watched the prior videos, literally Google or search this on the YouTube channel, you'll see. I'm just gonna breadcrumb you all there, but the quarterly theory, in alignment with that, this is what happened today. So obviously via the 4 hour, we had the context of the narrative. We had our target via the M15. Now it's simply just to go to a 1 minute time frame and wait for the first fair value gap to inverse and get retested. That'll be where we enter. TP, we know where the TP is. So 250, what happened? Price melted, right? 251, we had this candle. A bearish fair value gap then formed. I already knew where I was going to enter. I was already getting my limit orders ready. But just so that you are aware, there's a low here, right? How further low do you go? I'll speak on the one I was looking at. I was looking at this. We took that out during a macro time, opened a fair value gap and pushed up. You see it inverted there, right? Inversion, it just simply means if it's a SIBI, sell side imbalance, buy side inefficiency, or a bearish fair value gap. It just opened by this purple gap. If you can not see it, let me show you that. If you don't know what a fair value gap is, just comment, I'll make a video on it. And if you don't know what an I inversion fair value gap is, just comment, I'll make a video on it. But macro window ran liquidity cool, inversion, fair value gap opened a busy, a bearish fair value gap. I waited for price to push through and close. If price is doing this, but it hasn't closed, that's a premature entry. Wait for the candle to push close first, then set your limit order for there. Price then came down, triggered us in, right? Stop loss was obviously there, TP was there. Whatever your stop loss is, your TP needs to be twice what your stop loss is. In my case, it was 2.4 R, 2.43 R. Cool. Got that done and dusted. But yeah, liquidity sweep within the macro window. Fair value gap opens, it inverts. We retest the fair value gap and start pushing up. Another retest, prices pushes up, reverses again, and then pushes up to ultimately hit the TP. Dramatic session, but quite nice. Obviously, this is outside our macro, so this is irrelevant at this stage. But one thing of note that I wanted to really make sure that I hammer in this video, for me personally, since this is film that I rewatch at a later stage, I entered, or I had a limit order, right? I had the limit order, cool. Price came down and then started to push up. So what I did, I entered another position, not at my initial area, somewhere over here, right? I entered the position, then the price came back down to trigger my original buy limit, and then we proceeded to go back to the upside. Now, since obviously I had double my usual risk, my psychology or management wasn't as best as what it should be. In an ideal scenario, I don't move my stop loss. I don't trail it to break even. None of that. I leave it at its original invalidation point, which would have been here, and the TP will be there. Enter position, we either hitting stop loss or take profit. So in this case, since I was afraid that it was going to move without me, without triggering me in, right? I then impulsively entered a market order, right? And I adjusted the stop loss accordingly. It wasn't even at my ideal position, but just to adjust the stop loss so that I have the same risk that I had calculated. And then I was gonna delete the limit order. Price came down, triggered me in, and then started going in in my direction. That was from here. Once it did this, I then trailed my stop losses from this area to break even for both the positions that I had entered. Then as price came down, I'm very lucky because the stop loss for my initial or my limit entry order, it was just beneath this wick here. This obviously took out my impulse market order purchase. Cool. Not hating on that. I just took $1 loss due to commission. But then the other position still stayed in play. It went to its full TP and I recovered the slight loss from that and obviously full TP. So that was quite cool. I say that to say this. In future, stick strictly to 1 hour per trade. It doesn't matter how good it looks, Chava. It doesn't matter how solid the fundamentals are. Each and every trade has a 50-50% chance. It's either going to be right or it's going to be wrong. Allow the probabilities to play out and allow your edge to show itself over a large series of trades. We don't know the order in which losses and wins will come. We just have to weather the storm. But over a series of trades, the edge will display itself and the returns will then begin to slide through. That's that on that. And that's the breakdown on today's trade. London macro delivered beautifully. I will not be participating for the rest of the day. I'm going to close trading view. I'm going to go to the gym, and then I'm gonna go to campus, get my lectures in, and that's that for that. But very nice trade. Tomorrow is, of course, the day before a big three news driver. Wednesday we've got FOMC funds rate. So tomorrow I will not be participating. Wednesday I will not be participating. I'll see if price offers us something on Thursday. I'll then also look to potentially participate on Friday. And that'll shut off July. That'll end of July for us. And yeah, we'll see what August has in store. We'll see what August has in store. But other than that, thank God for the skill. And let's see what happens tomorrow or the next trading day. Whatever. Cheers.